This video presentation of Advanced Cell Technology Inc. It's an OTC QB listed stock trading our ticker ACTC. It's a pretty popular stock in the regenerative medicine space, fallen from highs up around 9 cents back last May, all the way down to lows of 5.5 cents. Again, made a climb up to around 7, pulled back, sitting right around a pretty nice support level, just below 6 cents, forming a double bottom pattern over the last couple months. A chart to keep an eye on to come back off this bottom and potentially go up and test this 200-day moving average again. Since bottoming back here in August, MACD is trending upward, making higher lows, but at the same time, if you scale back a little bit further, you can see it's kind of a wedge pattern for the MACD, so giving a little bit of a neutral look. I see the histogram bars climbing back towards zero. I'm going to watch for a bullish cross, the 12 passing through the 26 EMA, and certainly to see if this MACD can break back above zero and break this downward trend line. It'd be a much more bullish look for the overall trend if that can happen. ADX, pretty neutral reading. But with the negative DI coming down, it does look like some of the negative pressure is subsiding. So keep an eye on that as well going forward, because I want to see this positive DI snap upward and break back through the ADX to show some strength in the positive direction for the chart. Money flow index was coming off the bottom. Looked like it wanted to break through 50. Stalled out with a down day yesterday. Going forward, we always want to see all three components holding the upper half of the indicator to show people are paying higher prices for the stock. This is actually a pretty nice look at the accumulation distribution. In the near term, in the mid-term, in the longer term, see that there's a fair amount of buying pressure that stays in this stock. You can see that a little bit more clearly in the Chaikin money flow, primarily holding in the green, seeing over 20-period increments, buying pressure is outweighing selling pressure. Nothing really positive going on with the CCI at this point. A little bit of an uptrend over the last couple days, but by being down at negative 62, tells me that the price is well below its 20-day mean. Buy and sell points for the CCI come on the break of 100. Full still down in bear chart territory below 50, but is moving up, indicating there's a little bit of momentum building in the play. And the tricks, similar to the MACD, but it lags it. It's a very slow moving indicator. Just look for something along those lines. Want to see a bullish cross. And again, breaking this series of lower highs it's been making, show a little bit more strength to a bullish trend. As I mentioned, down day yesterday, very minor, less than 1%, but what it was enough to stall out the RSIs from breaking to the upper half of the indicator to show bullish momentum in the chart. In every case, we want to see the RSIs, all three components over top of that 50 mark. You can see right through there when they made the break. That was when the momentum was picking up steam. And of course, that's when the price per share made its most recent move. Break back down through 50. You can see the momentum coming back out of the play. So that's why it's important to see the RSIs on the upper half of the indicator and holding that position. Now, as I mentioned, I'm going to look for a support level just below 6 cents. Now, that does run all the way down. You can see down at 5.75 cents and even down at the very bottom at 5.5 cents. But right now, because this has been holding this upper level, that's the spot I'm going to look for. And ideally, it would actually start at 6 cents and hold that as support and continue to try and move upward. So I'm going to go ahead and leave that support line right there. But you can see it actually does run a hair below it. Resistance comes in at quite a few different points. Definitely staggered around because you can see this is a pretty active stock. But the first place I'm going to look for it to start to pick up is right there around 6.4 cents. It was a tough spot for it to move through in November. Even going back into May last year, that was the support point that it bounced off of. So that's going to be the first area that I'm going to look for the chart to start to meet some resistance. With the heavier resistance right up here around 6.8 cents. Now it's based upon these recent highs. And most importantly, this red line, the 200-day moving average. You can see the chart's had a real hard time moving above it. 200-day always serves as a dynamic support and resistance point. You can see back in July, tried to hold it as a support level, finally caved in, and ever since then, it's been fighting it as a resistance point. So that's going to be a key level for this chart. I'd say that there's going to be some upper end resistance up around 7.5 cents. But if it can make it through that 200-day, that's the first sign of some real bullishness coming into this play. And certainly if it pulls back and it holds it, then I'd look for it to try and take out this resistance point. Plenty of liquidity in this play, 6.4 million shares traded. As I mentioned, it's generally pretty active, so there's not a big issue with liquidity. Right now, I'd stay focused on this double bottom type of look and see how this chart can perform going forward. As always, merely my interpretation of the ACTC chart. Thank you for watching. Trade smart.